Hi everybody, this is Alert Day Trading. The purpose of these videos are to journal my trades and look over any mistakes I'm making, try to see what good behaviors I'm exhibiting and try to duplicate those. And if any of you can learn from my mistakes, then great. Again, these videos are not to give any advice, it's just to journal my trades. So I noticed Twitter, TWTR, getting to the high of days. So this is a breakout trade for me. You can see it's in this range here. This earlier resistance level was holding as support, and I was hoping for a breakout above this level of resistance. I always start with a 1 minute time frame. And you can see I'm just using very little size. I'm testing out my strategies at the moment, trying to create consistency before I really size up. I have a trading log with my statistics that include risk to reward, so the average risk to reward per trade I make, also my statistics of winners versus losers. So here's the 1 minute time frame. And there's clear resistance at $39. So I waited for the break above 39 as well as a pullback. So there's the break, we got a pullback, and then my entry was that first candle to break that high of the previous candle. And I actually made a market order instead of, I usually do a stop order, so that once the price hits that level, the order goes through. But I saw it was right above here, so I just put a quick market order. It's not my favorite thing to do, but I thought it was okay in that moment. But then it turned right back around, and I had a stop loss. Originally I put the stop loss right below this red candle, but I thought it needed more room, so I put it below the low of this pullback here. The 377 with about 39.07 was 30-cent risk. My profit target was right under $40, so I'm risking 30 cents to make, hopefully to make $1.95 to be more exact. So that is about a risk reward of 1 to 3. That fits into my minimum risk reward of 1 to 2, so I took the trade. As you can see, it didn't work out. It turned against me, got stopped out, so I took a small loss. One thing, so I have incremental risk, so I risk my smallest size with the 1 minute chart, and then I risk more with the 3 minute, and I risk even more with the 5 minute. So I was considering taking a trade with the 3 minute chart, but once the 5-minute chart looked more promising, then I just used the higher time frame. So I actually have an order right now. You can see the order. Is for 39.06. So I'm giving this another try. Normally I buy the high of the most recent candle, but since this is a breakout trade, I don't want to buy under the resistance. I want it to break back above. So I want it to break above this red candle, 39.04, and then I will buy at 39.05, the stop at 38.67. So it's about 40-cent risk, with a profit target of 39.90. So that's about 85-cent reward. So my risk is about 40 cents with an 80-cent reward, minimum 1 to 2 risk to reward. So everything looks good. The only thing I haven't mentioned was when I originally got into the trade with the 1 minute, the volume I think was not in my favor. I did notice that it was increasing, so that's a good sign, but it just didn't follow through. So I'm a little bit, we'll see if this breaks above with increasing volume, that looks good. But if the volume continues to decrease, it's not looking good. Positive signals, we have higher lows, so that's good. It's consolidating, so I usually find that if we draw a resistance level right here, and then draw a trend line here with the lows, this is creating a nice, in my opinion, bullish pattern. So the only thing that I'm not crazy about is the volume, but I have seen many times where volume just spikes up. So we'll see. This increasing volume makes me more optimistic. So we'll see what happens. I also find that when stocks consolidate into smaller territory, the pressure, in my opinion, increases, of course, with increasing volume. And when that happens, I find that it's kind of like steam just being released. And you have people who are shorting the stock at this level, and people who are buying the stock at these levels. They're going, they're, as some people would say, battling for control. Of course, short sellers want the stock to come down, and the longs want the stock to go up. So whoever wins control will find out. But once that happens, the short sellers, if they see that the buyers are gaining control, they'll cover their shorts, increasing the buying. So that's why you see a lot of these big pop-ups. Same thing for the opposite. So if the shorts take control and the buyers see that, they'll start selling off their stock. And then you see a big downside. So just wait to see what happens here. Taking a little longer than I'd hope, but you have to be patient. Another positive signal is this blue line, which is the 9 EMA, exponential moving average. I find that to be a strong level of support, and it has not been broken on the 5-minute chart. So that's looking good. So I'm just gonna wait here, see what happens. And again, if you're watching this, my mentality is that this one opportunity is one of many. So if this one doesn't work out, I put that into my log, and after 20 to 100 trades, you come up with a statistic of wins versus losses, or trades that worked out versus trades that didn't, and you create some kind of expectancy. And if you have what would be called a positive expectancy, then you're more likely to take these trades in the future. So if, for example, you know that this trade works out more than, as you can see, the price is breaking up, looking good. I want more volume to come in, so this resistance is holding. So good sign for the short sellers. Not a good sign yet for me as a long. So you can see the level 2, pretty heavy on that $39. You want this to, that's a good, there you go. So now it broke above $39. So now my entry is at $39.05. About to be, the order should go through. There we go. Now I'm in. And we'll see what happens. My first price target with, so that's a 40-cent stop loss. I need to put my stop loss order under my stop loss level, which was 38.66. Do that over here, so I'll put it a little bit underneath. There we go. So here's my stop loss, and my first price target will be at 1R, meaning if my risk level is 40 cents, then I will scale out at the first 40-cent level. So my average price was $39.05, but my target was $39.07. My price target was $39.05, so I'm going to scale out at $39.45. Just a small portion. I use 1/5 of my portion every time I scale out. The only exception is when I get to 2R, so twice the risk. So again, the risk is 40 cents. So if this gets to $39.85, then I will take off 2/5 of my size. And then every increment of 40 cents, I will take off another portion until I have the last share. This is a higher priced stock, which I try to avoid, but I like the pattern. So volume did increase as it broke above that level. So I would like to see more volume come through. just watching right now, it's kind of hovering around my entry level. So sometimes you might want to see the price break above the resistance, come back, and then break above again. I already tried a trade earlier, so I'm not going to take more size. I'm going to limit my risk. So I took a trade and I was down about $4. So I include that in my overall risk on this one stock. So if I didn't have that $4 loss, I might risk a little bit more. Again, I know these are small amounts, but I'm testing my strategies with a small size, and if I notice, that I'm winning more than 50% of the time, and I'm winning, let's use a simple dollar amount, I'm winning $2 every time I win, and I lose $1 every time I lose. That's what would be called a positive expectancy. So over 10 to 20 trades, if you do the math, 50%. So if you, let's say 10 trades, and 5 times you win $10, and 5 times you lose, 5 times you win $2, so total would be $10. And then 5 times you lose $1, so total would be $5. That's a net gain of $5. So if you multiply that by however many trades you take, you should end up with more money than you started. That is what I am trying to prove to myself. So I'm using small size. If I notice that, I have good statistics, I will increase my size down the road. So as you see, the price is going in my favor. But again, my price target will be around $39.45, somewhere between $39.40 and $50. Again, that's the 1R level. And one thing I haven't mentioned is I do like to raise my stop loss level. So the 9 EMA I really find to be a good indicator for exit strategies and your risk levels. So the 9 EMA currently is at 38.88. So what I like to do is reduce my risk. So 3 shares is 1/5. So I'm going to put a portion under the 9 EMA, which was there. Well, now it's 38.87. So I'm going to give it some room. So I'm going to bring it up to maybe 38.77. Put 2/5 there, and then leave 3/5 at my original stop loss level, which was below this right here, 38.66. I'm in this trade. The trade stock, I noticed, does not move as quickly as as other stocks might, and part of that is the float. So on this platform right here, the trading platform. It shows the amount of shares available to trade. Twitter has over 776 million shares. The volume is good, 47 million, but it's still a small percentage of the amount of shares that can be traded. So you're not going to see huge moves in a short amount of time. So I am giving this trade time to fulfill itself, but I am keeping a strict stop loss in place while we're waiting, and now it's starting to come against me. So we'll see. Remember, I reduced my risk, so the EMA is still holding. You can see it broke right here, but that's why you want to give it some space, because it could break a little bit, but as a lot of people would call it, it's just noise. So still the EMA is holding, still coming up. It's now up to about 38.90. So I might bring this right here up a little bit, just under 38.90. Give it about 5 cents. I usually do about anywhere between 2 to 10 cents of room. I'm pretty tight with my stop losses. There's times where the price will cross your tight stop loss level and just go in your favor, and you've been stopped out. But I do notice that more times than not, the price holds above the EMA. And I would say more times that a stock breaks below the EMA, it usually doesn't always go back in your favor. So that would actually be a very good statistic to run. So maybe what I'll do is to have a chart which says every time the stock breaks through, what's the percentage of the stock actually going back into the favor of your trade. I do want to just show you while we're here. This is a lot longer than I would hope to make a video, but this is a live trade, so hopefully you can all kind of see my thought process. Again, this is not to give you any advice. This is just for me to journal my trades, think through my trades, point out any mistakes I'm making, good behaviors I'm making. I would say the most important thing to point out for myself in this trade is the decreasing volume. Not crazy about that. And it's 8:20, so this is 11:20 Eastern time. So it's getting close to lunchtime on the East Coast. So that's another indicator that I think you're safe to get into a trade all the way up until 12 Eastern. Just my experience. I've seen stocks behave great just before 12, but then I noticed right after follow through is not super great, so you usually want to get out pretty quickly. Unless you see the volume increasing, because that probably means people are not going away from their computers. So while this is in play, I want to show you a trade I took earlier. I have another screen, so I'll be able to see if what's going on with Twitter. So I'll be able to jump back if it's moving in my favor. It's starting to move back in my favor, but put an alert here if it goes above 39.20. Right now it's just kind of going up and down, not creating another, we have a consolidation area here. Well, now it's getting really close to that 39.20 mark. So if you are looking at at these dollar amounts, again, this is just testing my strategies, but using, real money, so I can practice trading with emotion. Practice the skills of repeating the same process over and over again. So in terms of, buying an entry, quantifying your risk, reward potential, and then following your exit strategy. Just going to quickly show you this trade I took so I can talk through it. So this stock was pushing up. This stock was pushing up. Here's the early market hour. It's about 9:45 Eastern time. And I started getting interested around here. I did not catch any of this move, so I got interested here. Really nice volume, prices staying above EMA. Waited for the first red candle. Actually traded on the 1 minute chart. So my first entry was right here. Wait for the first red candle. The daily chart, I found some resistance at 430. So my entry level was 392 with a risk of about 372. It's about 20 cents. In hopes to make 40 cents. So that's a risk to reward of 1 to 2. Just got an alert on Twitter. Put this blue. Go back to Twitter here. So, right, stock is moving in my favor. Back to this INPX. 1 minute chart broke above that high. Now, if I were going to call this a mistake, it would be that I bought below a whole dollar level. But I thought with enough volume that we could break above it and get to that next level of resistance. If you look at let's go back. So what's really cool about this platform is you can link all these different windows together. So if you notice, this is a red, 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 red. So if I hit something here, it's going to change everything that's with the red. So let's go back to Twitter. It's breaking above that 39.20 mark, which is a great sign. Again, my first profit target level is 39.45. I will probably take profits just as it breaks the 40 cent level. I'm going to change this. We'll go back to IMPX. I'll put a level 2 out. So see how this chart is currently on the blue link. So once I hit red, it links it up with this red chart. Go to my 5-minute time frame. So as you notice, the price is definitely moving in my favor. I definitely use level 2 to get in and get out, and it's looking good. The buyers are outweighing the sellers, and you see it goes by pretty quickly. But if you look at the number, the price, and you look at the size, you see that decreasing pretty rapidly. That means that the buy orders, okay, I need to get ready to press the sell button. That means that the buy orders are, as you might hear a lot, eating up the sell orders, which is a good sign, because as more buyers come in, that pushes price up. There's all these orders to sell the stock. So once the 39.30 gets taken out, that means the next order is 39.31, and so on. Not too aware of all the exact technicals of how the orders are put onto the level 2. I think it has a lot to do with the market makers. I'm sure a lot of it has to do with the programming that's involved in the whole exchange, the market. But I learned once you don't have to know how the light works. You just have to know how to turn the switch on and off. Of course, it's really helpful to learn how all the wiring works and all that. But you don't need to know how it works to know how to use it. The only problem is if it stops working, then we have a problem. So then it would be important to know how to work, how to fix the wiring. That's an alarm I put for myself. So I've definitely been working on my discipline. I don't like to trade past 9 o'clock, so 12 Eastern. So that alarm is just a reminder, hey, you sure you want to keep trading as we get closer to lunchtime? So it's nicely moving in my favor, slowly. I mentioned before with a lot of shares outstanding, and you're not going to get these huge moves unless the volume. Look at the volume there. That's a nice move from 36 to 37. That's a $2 move in 5 minutes. So that's possible. You need that much volume. So I'm just going to go back to that INPX trade. So the 1 minute candle. Broke above that high right there. Did not break above the $4 mark. So in hindsight, probably would have, it might have been wiser to wait for the break above $4. But with the volume, I felt comfortable to take the trade. As long as I keep a strict stop loss, I'm okay to take this trade. It's a bull flag with increasing volume. But it turned around. Didn't work out. I think it was the 3 minute. I put an order in at the break above this candle, but didn't go through, which was kind of a good thing because then it didn't go in my favor. But that's hindsight. So I eventually put an order at the 5 minute chart at the break above this candle. And, with a good risk to reward here, it's about 17 cents. Again, my profit target was up here around 430. So that's 70 cents to, it's about 55 cents of reward with risk of just under 20 cents. So that's almost a 1 to 3. We're talking about 376 to 361. That's 15 cents. And then a 55-cent reward. It's actually almost a risk reward of 1 to 4. About 1 to 3.5. So that was in my favor. I got entered into the trade, but then it just turned around on me and I got stopped out, and it's just been kind of in this small range the rest of the day. You just see the volume just go away. So of course I was hoping for another spike in volume, but that's okay, because as long as again, over a span of 20 to 100 trades, the statistics are in your favor, then great. So this Twitter stock is hanging around this level. So I'm still in this. In my most recent trade, I am green very little. On the day, I'm still red on Twitter. And if you add the INPX, I'm still red altogether on the day. But I'm following my trade plan, which matters most. And I mentioned earlier that I like to trail my stop loss, decreasing my risk. So if we go back to the 5 minute chart, the 9 EMA has moved up to 39.06. So I'm going to give it a little more space than that. So I'm going to put 39 38.97. And I'm going to keep my original stop loss at 38.65. So currently I'm of the impression that I want to combine my exit strategy of trailing my stop loss under the EMA, but also keeping a portion at my original stop loss level. However, as the trade idea changes, you have to take all these things into account. So getting closer to lunch, the trade turns around against me. It's not a really good sign. Volume has not increased, which is why I feel comfortable to stick with the trailing stop loss. Reducing my overall risk if the trade decides to go against me altogether, but keeping the original stop loss level, because I think it's important to stick to your plan. If you say you're going to risk this amount to make that amount, you have to stick to it. Many times I've raised all my position size. I think I'm going to get stopped down a little bit. There you go. So, and it's, this happens a lot. My profit target my first scale out target was 39.45. Went over to 39.32. So, get so close and then it just turns around. But I think you just still have to stick to your plan, because the thing is, when it works out, it's going to outweigh this small loss. And I know it's a small numerical loss, but I'm talking about small percentage in risk to reward. For example, just in the beginning of this week, going back to last week, I had a percentage of things versus losses was like, I'll just take 5 trades, and I had 3 losers and 2 winners. 3 losers was I risked my level, but I stuck to my 1 to 2 risk to reward, so I lost that 1 risk. And the 2 winners ended up getting just about to 2, so they were both small gains. So I was pretty much break even for 5 trades. And then I had 2 trades that were fantastic. One of them went 18 multiples of my original risk level. So the trade ended up being a 1 to 18 risk to reward. Now again, I am still using small size, but that gives me confidence down the road when I increase my size. That even if you have break even for 5 to 10 trades, I'll use that 1 trade that just puts you over to the edge of being profitable. So now if I were to maybe make a correction for the future, not only do I trail my stop, but I also usually scale out if price breaks below the low of the previous candle. I tend to do that more when I'm more in profits, but maybe I can just automatically do that no matter what. But I have not decided to do that, so I'm sticking to my plan of reducing risk as the price breaks below the 9 EMA. and sticking to my original stop loss. So let's say the price goes back into my favor. I don't use the original position size to scale out. I use the current position size to scale out. So a fifth of 9 shares is 2 shares. It's really less than 2, so what I'll do is I'll go to 1, and then I'll press the button twice. But this allows me to control the sizing a little better. Again, I know this is small size, but my goal eventually is, instead of coming in with 30 shares, my plan will be to do 300 shares. So you just add a 0 on everything. So then, if this is $5 today, in the future it'll be $50 in hopes to make $100, for example, per trade. So if you take anywhere between 1 and 5 trades a day, you're talking about potential of anywhere between $50 to $500 a day in profits. In losses, probably anywhere between 1 and 200. Take 5 trades. The risk is $50. I'll lose more than $250 that day. Down the road, you add another 0. So instead of 300 shares, it's 3,000 shares. Now we're talking about thousands per day. Doing the same thing I'm doing now. So I'm just building my confidence. And building my statistics. Just checking the scanner here. So, looks like Twitter is turning against me here. And I think it has to do with low volume and time of day. I don't mind taking trades after 8 o'clock, but we are getting, 11 o'clock Eastern. We're getting close to that 12 o'clock Eastern time, so people are probably stepping away. And you probably also have everyone looking elsewhere for trades. I'm just scanning, see what's going on. See, this looks kind of interesting. Increasing volume. This would have been the area to get in. Of course, I don't know about the risk to reward, but you have a nice up move. There's your red candle pullback, break above. Let's see, here's 743. But see that, I'm not crazy about that. It's risking 40 cents. I would say the reward would be to get to the next whole dollar amount, which would be $8 here, depending on the daily chart. You can see in this area, there's resistance on 790. So you can see from $7.44 to $7.90, that's 45 cents. But then you have, and I use the 9 EMA as a stop loss level. It's about $7, so you're risking 45 cents to make 45 cents. Risk reward 1 to 1. The only exception would be is if you use the VWAP as your risk to reward. I'm sorry, as your risk level. That would be 7.18. So you're risking 30 cents to make 45. So still, it's about right, 1 to 1.5. So to reach my minimum, I probably, most likely, if I stayed disciplined, would have passed on this trade. What I probably would have wanted is a little more pullback, a smaller candle here. So the entry would have been around 7.30. So you're risking 30 cents to make 60 cents. Would have been more ideal. Maybe in the smaller time frames, the risk reward would have been more favorable. But I risk less in the smaller time frames, which is fine. I find the 5-minute time frame is the most rewarding time frame of the three. But I do also notice that there are trades that are favorable on the 1 minute and 3-minute time frame that you would not be able to get in the 5-minute time frame. But I do also notice that the statistics are not as favorable in a 1-minute time frame, so I risk less. But the risk to reward is really nice. So on the very few winners, there are nice gains. On the many losers, they're very small losses. So it makes it worthwhile, but I'm still creating statistics on that. So if we use the 1-minute chart here, the risk was very much in your favor. We're talking about only 15 cents, 10 cents of risk. And then if you use the top of the VWAP as a kind of level of resistance, so if the entry is 740, you have 760 as at least first scale out. It's 20 cent reward, risking 10. So the 1-minute chart that fits the risk to reward. So Twitter is still doing its thing. Still in the trade. Came all the way down to 38.78 here. But the issue is it broke below that level of resistance. It became support. So the support did not hold. So we'll see. I'm sticking to my trade plan. I already raised partial of my size. So I reduced my risk, but I am sticking to my plan to keep a portion of my position always at my stop loss level. So this is a much longer video than I would ever hope to make. I'm trying my best to keep them definitely under 15 minutes. My goal is to be around 5 to 10 minute video. But this is a live trade, so hopefully you can, this is helping me talk through my thought process. I don't have expectations on many people watching these videos. It's more for my journal process, for me to think through my trade process and try to point out any mistakes. And if you can learn from it, then that's great. So I hope you know the not much action going on. We did get to see Twitter break above this level of resistance. This is a breakout trade. So hopefully these levels hold and continue on the upside. Look at the 5-minute chart just before I end the video. We have a higher, we have a low, we have a higher low. So is this the higher low and this is now a lower low? Or is that your higher low and that's your higher low? So these are, as they say, confirmation bias. You look for things that prove your point. So it's better to just look at all the things that would go against your point of view just to make sure your point of view is right. So I have a feeling this is going to, I actually don't know, but I do have a feeling that I will get stopped out, which is okay with me. But I do, of course, hope the trade turns back in my favor. Looked good for a little while, but I think with the low volume and as we get closer to the lunch period, the odds are against me. But I'm not going to exit my trade in fear. Just stick to my plan. And then we'll see after 20 to 100 trades what my statistics are. This is under my breakout trading plan. And I hope you all can learn something from this. I would say the takeaway is pay attention to the volume. Follow your exit strategy. One might say, why did you take profits? Well, because it didn't reach my first, price target. So if I if I get in the habit of taking profits too early, then when the trade really goes in my favor, I'm in the habit of taking profits too early instead of letting it play out and the trade turning into a nice winner. So anyway, you can see that I am getting very close to getting stopped out, but you can take a look at Twitter later in the day, and February 6th. So if you want to see around noon, did the price break below 38.65? If it did, I got stopped out. You can, if it went up to 39.40, then it ended up being a profitable trade. Okay, good luck and have a good day.